Hello everyone. So this video is going to explain the Bollinger Band indicator. So the first thing I want you to do is to draw your levels of support and resistance and your trend lines. After doing that, you can see my levels, my support, resistance, and my trend lines. After doing that, I want you to go over to this place, indicators, and click on it. So what I want you to do is to search for Bollinger Band. Bollinger Band. So this is it. This is it over here. Bollinger Bands. So you click on it once to add it, and you go back. So I want you to go over here to edit it. I don't like the way it's looking on my chart right now. You might like it, but I don't like it. So if you like it this way, you can leave it. But what I want to do is I want to edit it. Input Bollinger Band. That is, I'm using a 20 period moving average as my middle band, and for the outer band I want to use red for the up. For the middle band I want to use a green. For the outer band you can use any color, but I want to use red. And for the other band I want to use blue, or let me use red. So there you have it. So for the background I like to leave it plain white. So that's it. So this is your Bollinger Band. So the Bollinger Band indicator has three components to it. You have the outer band, which is the upper red, the upper red band. Then you have your middle band. You have your middle band. You have your outer band. You have your middle band, and you have your lower band. Upper band, middle band, and lower band. So how do you now use this Bollinger Band indicator? You can use it to do many things, but I'm going to mention up to three. First, you can use it to know when the market has a low volatility. Like over here you can see that the Bollinger Band is squeezing, like it's not as wide as this place. As wide as this place is squeezing over here. It's squeezing like a gala or something like that. It's squeezing. You can see that it has contracted. This is trying to tell you that the volatility is low. So what do you do when you see this kind of thing? What you do is that you draw your level of support and resistance around the area of low volatility. As you can see, this upper green here is my resistance, and this lower blue here is my support. So that's my support and resistance. I have identified area of low volatility, and you can see my upper band, my middle band, the green one, my lower band, my support. So once you see something like this, it's trying to tell you that there's going to be huge breakouts. That means volatility is going to increase upward or downward soon. So that is why you need to place your level of support and resistance in order to catch the side that the breakout is going to go. As you can see, the price broke below the Bollinger Band over here, and it starts going lower like this up to this point. So that's it. The price could have potentially also broken up and go up higher. So what you do is that you identify area of support and resistance around the Bollinger Band. So the green band now is like your neutral zone. If the price is above the green line, like the price is above it, what you do is that you look for breakout opportunities. But if the price is below the middle band, and is closely approaching support, you look for breakdown opportunities. So as you can see here, the price broke down. So another thing I'm going to talk about with the Bollinger Band is how to use it as an area of value, how to use the middle band and the upper band as area of value. So I forgot to say the Bollinger Band, the middle band could be 20 period moving average or 50 period moving average. Those are the ones I like to use, but you can tweak it to anyhow you want it. You can use a 9 period moving average, but the ones I like to use is 20 period moving average and a 50 period moving average. You can see over here my Bollinger Band is showing a 20. So that's trying to tell you that it's a 20 period moving average Bollinger Band. So let me use the 50 period Bollinger Band. So all I did is just change this my length to 50. So now it becomes a 50 period Bollinger Band. So how do you use the middle band and the upper bands as area of value? As you can see over here, the middle band price always reacts to the middle band. For example, here price moves up to the middle band and retraces lower before going. So what you can do is that if the price is below the middle band, like you have a daily close below the middle band, you can be looking for shorting opportunities till when price breaks above the middle band. Like in this case now, the price came down, broke below the middle band over here. You can look to short the market towards your trend line. That's why I also drew my trend line. You can look to short your market towards your trend line or your lower band. So before the price gets to the lower band, you close the trade. Then once price comes back to the middle band over here, you look to short again till price breaks above it. So once price breaks above it and start trading above the green line, green Bollinger Band, that's when you want to look for buying opportunities, longing opportunities. So you can buy it till price gets to the upper band over here, and you look to short or you go out of the trade entirely. So that's another way to use the Bollinger Band. So the upper band and the lower band are two standard deviation away from the middle band. So you can use the upper band to trade your stop loss. For example, once price comes to it, you can look to sell when price start going below it. If you are catching an uptrend and price goes above the red area over here, you can look to stay in the trend till price breaks below it. So that's how to use a Bollinger Band to trade your stop loss. Another one that I talked earlier is to use the middle band. Once price is above it, once you have a, let's say, 4-hour close, because this is a 4-hour chart pattern. Let's say when the price closes above it in the 4-hour time frame, you look for longing opportunity on the retest. But when price comes to it and it gets rejected on the middle band, you look for shorting opportunities. So that's how you add there and use your Bollinger band. Another thing you can do is you can use it to look for breakouts. Over here you have build up over here, price build up over here. Let me use a trend line to draw it. You have a price build up over here, like an ascending or a rising channel. You have price build up over there. So how do you use it? You wait, you how do you trade this? You know that that's your trend line. Price is already above the middle band. So instead of going just short, you have seen this build up over here. What you do is that you look to trade the breakout. If the trade breaks out, you can look to enter long and use your upper band here to trade your stop loss. Or so that's just basically it. So you can use your Bollinger band to, number one, identify area of low volatility when you see the band squeezing like this instead of expanding. You can also use it to identify areas of value. The middle band, that's the green one, is an area of value. Once price is trading above it, you should be looking for buying signals till price gets to this point. You should be looking for buying signals. So once price comes to the outer band here and you see candlesticks rejection and it is hitting an area of resistance, you can look to short the market. So you want to see candlestick rejection around area of resistance above the outer band to short. And you also want to see candlestick rejection around the area of around your lower trend line or area of support and the lower band to long. So that's how you use it for entries and exits of your trade. So looking over here now, you can see that the Bollinger band is very wide over here. It means that there is high volatility over here. That's why you see you can see it with this long candle over here. So that's all for this video. How to add your Bollinger band, how to use it to identify areas of value on your chart, and how to use it to trade your stop loss.